Good morning for this Monday, December 8th. The stock we're looking at is Salesforce.com CRM. If you recall, last week we put on a trade here at $51.90 last week, right in here where the white horizontal line is. So the market broke up through that high, went long, and that profit target was $53.90. Not a bad trade. So that was a two-pointer, and if you recall, our risk on this was very small. Our initial stop loss was $50.89, so we're risking like $1.01 to make two. So when we first put this trade on, the reward to risk was 2-to-1, which in my eyes is fantastic when you first put on a trade. It's after you put that trade on and manage the trade, that's where the reward to risk really starts to move in your favor. But when we first put this trade on, the reward to risk was very favorable. So what I decided to do was take off 3/4 of the position when it hit on Friday, and then move up the remainder to $53.13, which was 10 cents below Friday's low, which was taken out this morning. So that price was $53.13. So on the remaining portion of this position, we hit $1.23. Up 123 on the last portion of the position, and the majority of the position was hit at 2 points. So that was a good trade, to say the least. Now let's take a look at SSO. This is an ETF, as you know what this is. SSO is an index fund, right? It's a ProShares Ultra S&P 500. It's 2 times the E-mini S&Ps, or the overall market rather, right? So if the market's up, let's say 1%, this would be up 2%. As you can see, the market is right now testing the all-time highs, coming close to that level. So basically, we've got a high that was put in last week, or actually 1, 2, 3, 4, 5 a week ago. Friday is when this high was put in place, and now we're coming up to challenge that area. Okay, so what I would look for up in here is some type of, again, if the market starts breaking up through it and starts closing above the high that was put in place on the 29th of November, then you got to assume the market's going to continue going higher. But if the market cannot seem to break through it, and maybe we get a reversal pattern of some sort up in here, let's see. Today's so far 98.38. This high is 98.53. So we're within 15 cents of this high. Okay, and if you flip it to the E-minis, we're pretty much there. Today's high so far is 18.11.5, and that high on the 29th was 18.12.5. So we've only missed that high today so far by 1 full point only. All right. So if you think that this is a potential double top, a short-term double top, you can either short the S&Ps, or you could buy the SDS, which is the opposite of the SSO, right? So this is the inverse fund. So if you think the market's going to go down in price, the overall market moving down, then you would buy the SDS, which goes up in price as the overall market goes down. So that's a way you could play this in your IRA, SEP IRA, or any type of retirement account, okay? So the SSO, again, is the inverse. So the overall market goes down, this will go up. All right? SSO tracks the market to the upside, but it's 2 times the index fund. So that's a way to play it. So all I'm trying to say here is watch very closely to see what happens up in here. We're testing all-time new highs, right? They're coming down 1, 2, 3. 3 straight days pretty much, and then an inside, and then you took it out. So we're testing a level where I think it's, a lot could happen up in here. So I'm going to watch this very closely, and I'll let you know if I'm looking to put a position on either the long side or if I'm looking for a little counter trend move to the downside. Okay, so hope that helps. Have a great day, and talk to you tomorrow. Bye for now.